Welcome to the Capital Flows daily live stream. We are back after a weekend of, well, I know for me, I was pretty locked in just trying to work on some new stuff. James, on the other hand, has been gallivanting across the amazing country that we have and experiencing the best parts of it and coming up with some interesting real estate insights, making plays.
Bro,
As
somebody's gotta be a boots on the ground. You know
a
what I
boots on
mean?
the ground. Yes.
Yeah,
How are you going to quantify, the culture in a city without experiencing it?
that's right. I like to think the contrarian play to me is still understanding America better than anybody out there who's outside of America and doesn't get it. You know, asymmetry is still left in this country. It's the United States of asymmetry.
I like it. I think it is interesting how about so many Europeans. There's all those videos going around. So many Europeans came over here for the whole World Cups thing, and they were like, "Oh wow, America's actually pretty cool. No one's getting shot. We're all just hanging out,
Yeah.
having some cool food. Wait a second, maybe I can make something of my life and
Wait a
do it
second.
in an air conditioned room." You never know. I think it's really interesting because we're going to have an entire series on U.S. exceptionalism this week, and if you're here for the live stream, appreciate you guys being here. The main focus that I want to have is on this idea of U.S. exceptionalism, and from an investment perspective, because people like to talk about, oh, stocks go up over time, the US always wins, the Buffett kind of idea of never bet against America. But the question is, how does that actually connect to the data? Is that supported by the data? Because actually, this idea that stocks go up over time, that works in some countries some of the time, but it doesn't work in all countries all the time. And I think that the the ideas that we're going to cover today, we're going to connect to markets, especially as it relates to some of these flows that we are seeing, these IPOs, how it connects to these listings of new derivatives, everything. We're going to cover all of that. And I think what you will begin to see is that the United States and the culture and the aura and the trade of being long the United States is not just because it has worked in the past or there's just momentum on your side or something like that. There are actually fundamental reasons why that works, but there are also massive risks to it. And we're going to cover those as well because right now we have a lot of asymmetry building in the system in a way that never existed before. We have an entire relationship with China that is, by the way, completely misunderstood by everyone on the majority of the left and the right. Actually, two of the people that understand it the best, thankfully, are in office right now, Kevin Warsh and also Scott Bessent, or if you want to say office or whatever, their roles, which are the two most influential financial roles in the world. So we do have some positives, but just because those guys understand the situation doesn't guarantee that the situation is going to turn out well. And there's a lot of concerns that I have about the US China relationship, especially as this AI arms race is taking off and also you have this whole session or excuse me, this whole push in the space side as well. So we're going to cover all of that. If you are brand new to everything on what we're doing at Capital Flows and the entire goal of everything that we're trying to focus on, every single thing is meant to actively be or to intentionally be for active risk takers. So if you're actively taking risk in financial markets, this entire live stream is going to be for you. And especially if you want to navigate recession risk, inflation shocks, which, by the way, on the day today, inflation expectation have risen a little bit. But do you know what has risen more? Is real interest rates, which we're going to talk about in the paid subscriber section. And so if you want a clear read on rates, FX, and US equities, that is what we are going to cover for everything. And so if you are here watching all of this, go ahead and just retweet this entire section that we are doing. If you guys are on Twitter, I'd really appreciate it. And then I'm gonna make sure this is up and running. We're good, right, James?
It looks like everywhere is good.
All right, perfect. So the first section of the live stream is always on the macro playbook, where we're going to cover a lot of different fundamental drivers for everything. And then in the second half of the live stream, it's going to be exclusively streamed on Substack alone. That's where we're going to talk about decisions around risk, the biggest bets that we are taking. If you want to actively follow along for that, it is going to be in the paid subscriber section. All of the things that we are doing is exclusively reserved for them and for you guys as paid subscribers. So that is what we'll cover. And then we'll have some new stuff coming out for the paid subscribers soon. But every single day, you'll have a live Q&A in there, a proprietary report going out after the close and after the stream, breaking down and synthesizing all of these moving parts we're talking about. And everything, if you want to join that, will be linked below. All right. And then, guys, just before we jump into the slide deck for today, go to Capital Flows Research, go to the recent reports on SOFR interest rates, interest rate volatility, and macro endgame. What I laid out in this report is that this entire idea of hikes on the forward curve, by the way, if you were watching this, you understand how much open interest and bets are being expressed by traders in the Z6 SOFR contract. But this entire report broke down all the global macro views that I've talked about. And especially with Japan, with single stock futures that are getting released, like just every major thing. And then the paid subscriber report breaks down how I'm thinking about that from a flows and risk perspective. But coming back to the slide deck that we have for today and the focus that I want you guys to have is this idea, what we're going to cover today. I want to be able to have a framework that I can break down for you guys so that you can understand all of this news about the tariff, chip ban, satellite contracts. By the way, satellite contracts, massive deal right now, inside a single capital loop that drives it. So understanding the context behind all of these structural factors that exists. And one of the things that I will say, especially about, we're seeing this with Trump today, everyone is very disoriented by Trump opening and closing the Strait of Hormuz and all this different stuff. Everyone's like, oh, what is he doing? Maybe he doesn't know what he's doing. Is he playing the system? Does he really have enough intelligence to play 4D chess? Well, what is important to recognize is what is the context that President Trump, the people in this administration, Scott Bessent, Kevin Warsh, what is the context they fall into? What are the constraints that they have? If you can get the context, then you can narrow down your ability to interpret things, and you're not going to go off into these wild conspiracy theories that are pitched to everyone every single day. And the context for the US right now is fundamentally between the US and China. If you understand this context, you will understand basically 90% of every other idea with tariffs, chips, satellite contracts, rare earth materials, everything. And we've already done a lot covering this. The key thing to remember is that in the AI arms race, which is something we didn't even have a couple of years ago, in the AI arms race between the US and China, more asymmetry exists. We're compressing the tails. We're having more asymmetry, which just means little things can have a big impact. And the implication of that is that even if you have all of these, even if you have the US with all of the advantages that it has, if you begin to leverage every single thing in the economy, which is happening right now in the US economy, to AI and the changes around AI, you begin to create a vulnerability if that gets disrupted, which is why China is working so hard on the AI side for everything. Because if the entire US economy gets retooled to AI, and then the Chinese model or some part of the supply chain is dependent on China, then that becomes their asymmetrical linchpin to create additional economic warfare against the United States. And if you think that, like, oh, that's China, they're on that side of the world, why do I have to worry about them over here? You have to begin to realize they have already, in many ways, struck at the United States in an economic warfare fashion with global trade. And in many ways, they've actually won the short term battle. The question is, are they going to succeed in the longer term strategy and war that they have, which is very, very clearly against and antagonistic toward the United States? Just because there isn't a kinetic war doesn't mean that they aren't actively trying to subvert US interests. And I think that's, in the modern world today, people think the absence of violence means there's no malicious action taking place. And in truth, what we have in the global arena today is that China is smart enough to know they're not going to go try to have a kinetic war where it's physical violence against the United States. Right? Like that's not a great idea, not just because of the US dominance, but just because it would create so much it's not the wisest way to go about attacking the United States. The United States itself, as it has and China has done a reasonable job at this thus far, which is why the actions of Bessent and Trump and Warsh are so really important here. But China understands the limitations of a democratic political cycle. And they use their top down authoritarian kind of regime that they have to not only back industries and push things forward and try to carve out monopolies in the global arena, but also, there's a reason why the actions of China and a lot of things like that were, their global trade and a lot of other things amplified so much during some administrations versus others. So we're going to cover all of that. And all of this is just the data. This is not about a political view or about some thing that is pro left, pro right, pro Trump, not pro Trump. No one cares about that stuff, guys. What you need to focus on is what is the actual underlying data saying and how do you interpret that? And then how does it connect to financial markets? And that is what we're going to cover for our purposes today. So, starting with this idea about the headlines that we constantly see coming out of between the US and China. The largest exporter and the largest importer are locked in a loop. That's the US and China. China runs the largest external surplus on earth, a record near 1 trillion in goods and roughly 30% of global manufacturing value added behind a capital account that stays closed. Surplus money must be stored somewhere. With China's own markets sealed and no alternative at scale, it flows back into US assets. The loop closes by necessity, not by choice. One of the reasons why we've had such high valuations in the S&P 500 over the last several now 10 years, but specifically over the last 5 years, is that there is a excess of dollar liquidity that exists in the system. And that dollar liquidity gets recycled into US assets and will continue to be recycled into US assets until you actually have a significant change where the US China relationship begins to unwind. How would that happen? Actually, it would happen if the dollar's reserve currency started to decrease, which we're not seeing, or if China's capital account began to shift and they stopped running a closed capital account, which right now is unlikely. So that means that the two largest players in the world, their moves in the arena determine everyone else's. And so all the things that happen on the margin, and we're going to cover these right now, is very key to understand because like a lot of people are looking at all these news announcements between the US and China right now or by President Trump, and they're just saying like, oh, none of it makes sense. And the reason none of it makes sense is because you don't understand this context. This is the context that is the most important to understand. So going to this idea of the trade relationship, the US and China are, very much China is, or it's very much of a one-way relationship. The Chinese economy exports goods to the world, and those go into the United States. And people are going to say, like, oh, well, the trade data says that we're importing less from China now ever since Trump took office and these new tariffs came on and stuff like that. No, that's not the case. What we are seeing right now is the fact that when Trump, this is actually one of the reasons why Trump slapped tariffs on the entire world, because when we slapped tariffs on China previously, what did China do? They exported via proxy. And who did they do that through? Vietnam, Malaysia, Mexico. which is why, if you actually look at the trade data, the US trade balance, we're still importing the same amount that we did. We're still importing more than we export. And who is that coming from? A lot more of it is coming from Mexico. And they have to say, okay, well, less is coming from China, more is coming from Mexico. Is Mexico making that themselves, or are they just importing it from China? And when you look at the underlying data between Mexico and China, guess what? Not surprising that Mexico is now importing a ton of goods and they're exporting by proxy to the United States. So that is the environment we find ourselves in, which is why it's kind of like this whole idea of like, oh, if you push, you try to, push the beach ball under the water, it's just going to kind of like always try to find a way to come out. That is how the global supply and demand market for goods and services work. They're always going to find the place where they can get to the person that's going to pay the most for them, which is the United States. So there's a one-way relationship in many ways between the US and China. And this is going to determine understanding the flows of capital between them right now, the carry trade, and all of these factors around macro liquidity. And so when that exists, and President Trump, Bessent, Warsh, when those guys see that, and also specifically see, he's no longer on the board, but Stephen Myron, who was on the board as a governor, he was picked by Trump. And what was his main focus? One of the main papers and focuses that he had, it was on how the dollar's reserve currency status creates imbalances in the US and the global economy, which the net result is it carves out the middle class. And it's because of the dollar's reserve currency status. And so when that takes place, I would really say when you look at all these issues in the world today, whether it's around inequality or whatever it might be, all of it fundamentally comes down to the dollar's reserve currency status and the amount of liquidity that we have in the market today. And I think that's really the differentiating factor that will help you have this better lens on everything. So this idea where China is exports everything, and by the way, this kind of goes back to this entire idea of crypto. Crypto probably would never have the rise that it did if it wasn't used as a way for China to get dollar liquidity in the system. It was really a release valve for the amount of dollar liquidity in the system, and a lot of people I think still don't really understand that because the China itself, the reason why they recycle all the dollars that they eventually make is to be able to keep their currency propped up so they can keep carving out an industrial base of the United States and other countries. I mean, it's already happening with Germany because they're so cooked. Germany is one of it is the manufacturing base of the Eurozone. And the manufacturing base of the Eurozone is slowly crumbling. And that's why there's a lot of other issues in the Eurozone, not even to mention the migration that's taking place. And again, guys, these are not political ideas. These are just ideas that directly influence the flows of capital. There's a reason why foreign direct investment is not as high in the Eurozone as it is in the United States, which the implication of that is like there's a reason why you can have more stagflation in some of these countries versus others. One, they're short oil, but two, if you don't have real growth going through the roof and helping support the economy, then it's easier for stagflation to take place. So again, these are not a lot of people in the financial system will not want to talk about any of these ideas because they're too, in their mind, politically charged, even though we're saying like, oh guys, we need to understand the flows of capital. We need to understand the political incentives, geopolitical incentives, and all of the incentives of people for making decisions to buy or sell or what's going to force cross-border flows to these different regions. And the people that don't want to do that, that's fine. They're just not going to make money in markets. They can go keep drawing technical analysis lines or make an asset management business that just gathers assets or, eventually get infiltrated by some Chinese spy that takes all their information or something like that. But hey, we'll see that when it happens, okay? But when we go to the anchor of the system, US monthly trade data is still very, very negative. And we are, especially during, the only reason we've had it move up just marginally is we're adjusting to all these tariffs. But we're still at a massive, massive negative trade balance, which is important because on net, when you have a negative trade balance, that is two sides to a coin. So when the US, so think about it like this, if you are outside the US and you export a widget, you export a little teddy bear that you made in, you got it from China, you're in Mexico, you export it to the United States, and it gets used by a nonprofit who is using it for some type of thing. If you have that take place, then what begins to occur is you get dollars for that. And you take those dollars and you have a choice to make. And on net, what happens is there's a lot more dollars left over because investors, foreign investors, don't have enough money to be able to say, like, oh, well, I'm going to take all of this and just go buy goods from the United States. What they'll typically do on net is they'll hold that money in US assets because part of it is they need to be able to hold it for future use and not just consume right away. But the other thing is because US assets are the only game in town. And so when that takes place, it's a flip side of the coin where money can flow into US markets and stay in dollar denominated assets. And so America holds this structural position, which is why liquidity is so massive in the United States right now. And by the way, every single liquidity bubble that has taken place in the United States over the last 50 years, basically since World War II, has occurred because of this dynamic with the dollar's reserve currency status and cross border flows. Every single time. If you want a book on that, go read The Volatility Machine by Michael Pettis, or you can go to the I'm trying to think of what the other book is. Trade Wars or Class Wars by Michael Pettis. There's another book. If you go to Brad Setzer's Twitter page, he also has some really great stuff on this as well. And I'll go there before we kind of wrap up here today. But for the United States, it is not just about, oh, well, they're a cool culture, which is why they're doing really well. Temperate land, and this is way bigger than what people recognize. Temperate land near a coast is 3% of the world's land, yet produces 32% of its output. So temperate land near a coast, that's basically where James lives, is 3% of the world's land, yet produces 32% of its output. And America has more of it than anyone else. Plus, the largest navigatable river network on Earth. Moving cargo costs 3.6% of its value in the United States versus 10% in East Asia. So just think about it like this: is like if every single time, I mean, if you run a business, you know this because you pay a fee on every credit card transaction. But imagine you pay a sales tax on every single thing that you buy. That's a 10% sales tax. Like that's a lot of money. If you spend $10,000, you need to pay 1,000 of that to tax. If that is what occurs, more and more of your money goes to the tax as opposed to consumption because you only have so much money. Transportation costs are very similar to that in that if you pay more for transportation costs, that means the less and less you can spend on actually buying the actual stuff. So for the United States, it holds functionally a monopoly on this ability to output of agriculture, of oil, of a lot of different elements, and transportation costs in the United States are structurally low. So this is something unless the United States has some type of thing that blows up and the entire continent fractures into 20 little pieces. I don't know, James. There is all the theories about half of the coast for California falling off into the ocean. I'm not sure if you have
But you could
insurance
look
on
at
that.
yellow. I mean, we almost had our house burned down like 2 weeks ago, so that was cool. But then you also have I think it's the Yellowstone National Park super volcano. Not
Yep.
sure if you've ever looked into that, but that would take out the entirety of actually where I live, it would be somewhat okay, but it would take out like a third of the like habitable space in America. It's kind of a scary thing.
I would not be surprised if okay, hear me out, guys. Hear me out. I would not be surprised if this like new subterranean warfare machines that are coming out. Like I think we're I don't know if there's if we're looking into an investment in that. I forgot. I have to talk to our friend. But like, I think there's a lot of subterranean. Oh, we might. But by the way, guys, we'll have a special guest on Wednesday to talk about a lot more of these ideas. Who has like a ton of experience in this entire domain. So you guys want to be here on Wednesday, and then
Don't
tomorrow we're
miss
gonna
Wednesday.
what?
Don't miss
Y-
Wednesday for
Don't miss
sure.
Wednesday, guys. It'll be a bad idea. You don't want to miss Tuesday either because we're gonna have something special. Okay, so be here tomorrow. But um, on the subterranean warfare, I would not be so I this was actually like funny. I was like going over like, oh well, we have ships for sea, and then we have like drones, but like where can drones not go? Well, they can't go like underground, right? So like that's an issue. Like sure they can just blow stuff up, but like they can't go and like just go underground and that whole world, right? But subterranean warfare is really interesting. It's already happening. This is not like a oh maybe in the future one day. Subterranean warfare is already happening. I would not be surprised if there's like some type of like one country or another is trying to figure out how to trigger natural disasters through some type of subterranean warfare for stuff like that. Again, I don't know how volcanoes work or any like I don't know how that would happen, but I think about all these things taking place in the defense industry, and then you think about the asymmetry of like oh a volcano or this or that, and you're just like oh that it sounds like someone really smart could probably figure out something pretty crazy to do there, right?
Oh yeah. Yeah, if you guys haven't looked into that, go look into like I think there's some YouTube videos basically if that super volcano were to go off, go down the daisy chain of what happens to America, it's really bad. Like it gets down to destroying pretty much the all the air conditions, not air conditioners, conditions of the air, and it starts to get into basically crops and um, grid problems and all this stuff. So, like you're saying, if they're able to kind of cause tectonic shifts in weak points to increase the probabilities of that happening, yeah, that's like super sketchy. Super sketchy. Tectonic warfare, you know?
I think it's going to be really interesting. I think all of these elements are here's the thing. We don't know how like we always underestimate the impact of the things that we don't understand or don't know. And I think this is just one of those things which actually goes back to like this entire dynamic between the US and China. There's a lot of things that we don't know that are going on in the background, whether they are classified or just private meetings. And I think that if you've read the Jared Kushner book, which I think is like one of the best books out there, that he wrote, I think it was between administrations, right? Like it was post
It was
his
after the first Trump administration. Yeah.
yeah. I think when you read that, you begin to you'll begin to think about, for better or for worse, like you don't have to like Trump, you just have to understand him. I think that you begin to see him a little bit differently because, you know, there's all of these back end conversations taking place, but now social media is taking such a large role in the changes of, I mean, corporations, countries, everything. Like it's across everything right now. And those there's a lot of unknown factors taking place. Like I guarantee you that Trump isn't out there talking about Strait of Hormuz, and it's just like, I don't know, what do I feel like today? Oh, let's do this, right? Like they're having back end conversations. Someone didn't want to come to the table, or someone did, or whatever it might be, and there's something that's like, all right, well, let's do this, and let's, like try to get them to respond this way. Let's try this, so let's try this, and you know, this is kind of funny because it's like at the end of the day, like a lot of this whole process, and people don't like to hear this, is trial and error. I mean, it's like it's the same thing if you actually talk to any doctor and they're actually honest. I mean, they have like a reasonable idea of like what might be wrong, but When you go in there, you're just like, all right, trial and error. Let's figure out what the problem is. Let's try it out. And again, like people don't like to hear that because they're like, oh, well, this is my health or this is the U.S. economy or whatever. But at the end of the day, you're doing the same thing. You apply for a job, you see if it works, you try it out, doesn't work, you move on, right? You go try a trade. If it doesn't work, you move on, and you are constantly trying to put yourself in a place of asymmetry. And people like to think like, oh, well, if there's someone in public office, they should have a perfect track record or have a perfect understanding of all these things taking place or like an error rate of like zero, right? And I think like part of the reason why opportunities exist in financial markets, especially for interest rates, which we'll cover in the paid subscriber section, is because policy errors occur. Like action or inaction by the Fed creates opportunities. And especially in a world, again, this idea where rivers, moats, people, and energy in the United States, those all create structural elements where the Fed's policy errors directly transmits through this structure of the country. The shale revolution alone added more than 1% of GDP and then flipped the world's largest energy importer into a net exporter for the United States. Like that's a massive thing. This paper was published in 2017. You can go through this yourself. And again, this slide deck will be available afterward at Capital Flows Research. You can just go there and find everything. But the idea here is that the United States has a structural position for geography, for demographics, energy, and every single element across its natural capital stack. And again, people don't like to acknowledge that China, even though they have a lot of elements where they're competing, they don't have the same type of food and energy advantages as the United States does, which is why, these oil prices hit countries like Japan, Korea, China, all of these countries that are net importers of oil. It hurts them way more. It also hurts other countries like the UK, which is why, again, we were talking about this morning when we were going over trades, myself and James, and we'll talk about this in the paid subscriber section more. But there are certain countries right now in the Eurozone and some other places where their interest rate complexes are very fragile, and they're setting up for some very interesting trades. Because, again, all these ideas around migration, policy, things like that, those are all very important factors that get ignored by most investment banks because they're too, quote unquote, politically charged, even though you're just talking about facts. And they're ignored by all the quants because the quants don't like to, talk or focus on fundamental data because, they're on too short of a time horizon. Every quant will tell you that. Every quant out there is, primarily on a short-term time horizon. And yeah, there's, longer term models that you can build or stuff like that. But at the end of the day, every major quant firm out there has, trades across multiple time horizons, but none of them are very long term, right? They're all usually sub 2 months, sub 3 months. And policy changes always occur across years and decades, which is why I think there was just a video with Kenneth Griffin, good old Kenneth, that he was talking about how the prediction of earnings to earnings changes with alternative data is basically losing its edge. And no one kind of gets that because most people don't pay for alternative data. But if you've paid for alternative data for, I was just looking at some alternative data the other day on data centers and basically like mapping satellite data for all the data centers so that you can understand the run rate of some of these things. Like you can pay for that. I mean, it's like, I think I was talking, I mean, there was like a whole package, all this other stuff. But it's like 20 grand a year, like 20, 30 grand a year for data that just tells you what's happening. I mean, just think about that. Like, you want to, like, that's not accessible to the majority of people in financial markets. So, yeah, people don't like to talk about those things because it just makes investing seem inaccessible. But what is accessible is to everyone, and everyone's under the same constraints, is a longer time horizon, which is very difficult for people to do. So the market in this structural regime that we're in between the US and the rest of the world, the market is priceless. There's a reason why US large cap stocks are outperforming Euro area large cap stocks and China large cap stocks. These are not accidents that take place. There's a reason why they are occurring. And part of it is the companies that's in them. But what you have to, I think there's two sides of the coin. It's kind of bottom up and top down. Top down, you don't have the same demographic structure, geographic structure, agriculture structure, energy structure that in the Eurozone or China compared to the United States. On top of all of that, you don't have the same companies in those indices, which it's kind of in a feedback loop because what people like successful people gravitate towards successful people, like it's how the world should work. I think that's a good thing, right? Because then you actually have more amazing things happen. Like imagine like we just distributed everyone and we said like, oh, for every like super high intelligent successful person, they need to have like imagine legislating friends and just saying like you need to have like 5 friends that are not as bright. It's just like that sounds miserable. Like, because there's no incentive for the people who are like trying to figure life out to push themselves to elevate themselves and take agency over their life, right? And that's why if you try to, it's actually it's very interesting because it's like communism is all about the government controlling the means of production, right? And in today's world, the means of production, so much of it is literally around intelligence because intelligence has become so much more explicit as opposed to implicit. And I think that that's why everyone hates these ideas of like, I think billionaires today, because the main edge that they have, sure, they have these companies and everything like that, but the main edge they have is their intelligence because that's what they get paid for in the modern world. And you can't really legislate like the means of production, aka someone's intelligence, in a world where like you're supposed to have like freedom of speech and freedom of like all these other things, right? So it's very interesting environment and how people frame it.
Another thing on that last chart that reminded me was that book that a lot of people, everybody. I see the comments out there. People have their opinions on different people, but in trying to really understand the advantages and disadvantages of countries, that book Disunited Nations was like a game changer
Oh
for me.
yeah, totally, totally.
And I think you've read that, but that made me look at, like, our economy in an entirely different way, and I was like, "Oh, of course, like, of course this makes so much sense." And then that starts to shape in your head, like, why they import or export more, or what their advantages or what their disadvantages, where are their enemies, or, like, how close are they to their enemies or not, and it just really cemented in my head why America's position, like so much of it is luck, right? Like kind of not luck, but you know what I'm saying? Like
Yeah,
to find yourself with all of these structural advantages that other people don't have when it comes to like, walled friends on both sides, waterway systems throughout the land, not many mountains preventing people from moving about. Crop what do you call it? Amazing soil, temperate
yeah,
land, like all of these things are crazy great for America. That
yeah.
book's by
Yeah.
Peter Zeihan, if you guys
Yeah,
haven't
Peter
seen it.
Zion. Peter Zion is, I feel like I don't know how you would describe him. He's like the nerdy kid in high school who became successful, but he's still doing the same nerdy stuff that he always did. I,
Yeah.
I'm, I don't know. I mean, he's a really interesting guy. I think every geopolitical guy has a lot of confidence about every single thing they think right up until the moment that they're wrong. Um,
But they're
but
never wrong. They're never wrong, no.
Um, but again, guys, that's part of that's part of like just life and trading and building a business and stuff like that. Like I think, you know, it's just about it's about asymmetry, not about like did you get one thing right or wrong. So going back to this idea of the dollar, and we're going to connect this to these larger ideas of trades and things like that. The dollar's reserve currency status is a massive positive and also a massive negative. It's a dividend and a bill for the United States. Once you begin to understand this and the two sides of this coin, everything in the US economy, as it relates to the inequality or defense spending or real wages stagnating or things like that, it'll all make sense. The crown is a contract, privilege on one page, but burden on the next. That's the dollar's reserve currency status. The privilege is that 58% of world reserves, 88% of all currency trades, and most trade invoicing outside Europe runs through the dollar, the cheapest funding rate on the earth. So this is really key because if everyone is using your currency, it appreciates and you can do more with it. Just think about if everyone started using Dogecoin to transact or some cryptocurrency to transact everything, what would happen with it? It would go up, obviously, right? The thing is, the dollar has gone up, but it's not gone up the same way as like a meme coin or something like that. It's gone up in a way where it has a invoicing function where 88% of all currency trades are in the dollar. I mean, I cannot express like how insane that is. It's like the first time in history where like that has happened. 88% of all currency trades. And now you kind of realize why I'm like, oh, you have to know interest rates for the globe. The bill, part one, a permanently strong dollar. It rose 48% in 2022. Trade, exposed manufacturing, never came back. And you basically have, when you have this stronger dollar, so just think about it like this. When you have a stronger dollar than it should be, people, well, you know what? Let me just go to the DXY chart just so that people can get an idea. The DXY is a helpful chart to understand. Hang on. The DXY, you have to recognize when we talk about a stronger dollar for the reserve currency, the DXY has functionally been in a range this entire time. When we talk about the dollar's reserve currency status and the impact it has, what we're actually saying is that if the dollar was not the reserve currency and we actually had a shift, then it would probably be, I mean, again, this is the index, right? But it would probably be somewhere closer down here. If it was down here further and, 50% lower, it would change how exactly cheap it is to import goods from the US versus China or for the US versus Mexico. So if the dollar is weaker and we're down here, that means me as a corporation or a company is more likely to build stuff in the United States than I am to import it from China because the entire cost benefit analysis totally shifts. And here's the thing, like we're not saying that, oh well, like the US, we need to bring back sock manufacturing to the United States. That's what we really need to do, and that's what's going to create jobs. The idea is that we need to just shift how exactly we're pricing the cost benefit analysis between two different countries and the currencies they have, because the dollar is a lot stronger than you could say it should be, but there is no should. But the dollar is stronger, which is why the US has, everyone sells to the US because they have such a strong currency. You can get like a stronger, a higher return on your, exports. China, on the flip side, is doing the opposite. They're keeping their currency really cheap. So everyone says, I want to go to them to buy it. So you have these two factors on either side that create, and again, remember, this is the DXY. This is not the yuan or anything like that. So there's kind of some limitations to that. But when that takes place, you have massive changes where America earns roughly 2% or more on what it owns abroad than it pays. So basically, you can go to this paper here. The idea here is that there is a imbalance that exists in the United States between trade and investment due to the dollar's reserve currency status. And so, sure, the dollar has these upsides where if it kind of bails out the entire system, whereas everything is cross collateralized in dollar, everything is dollar denominated debt. The privilege of it is like, oh, this is amazing, but the US has to take the weight of it. How? By hollowing out the middle class, which, by the way, has an impact on real wage data. If you look at real wage data, if you actually also look at uh, growth national income data and divide the percentage of compensation of employees and corporations by the top line number, you'll actually see how money is distributed in the economy between the labor market and corporations. And it's all because of the dollar's reserve currency status. Again, that's the downside of it. The upside is that when there's issues and they're the world's insurer and they really take the burden of bailouts and things like that to provide liquidity for the entire system, because everything is dollar denominated in the system when everyone is trading with the United States. So again, these are elements that are kind of hidden under the surface, but impact everything every day. And again, what we talked about, is sure the dollar has strengthened here or there, but what we're talking about is the structural changes that exist, not just the short term obligations or changes that are driven by monetary policy or stuff like that. Because even during this time in 2022, when the dollar strengthened, did it move around trade a little bit? Yeah, maybe a little, but not a ton, not as much as not structurally. So the deficit, capital flows drives trade flows, not the other way around. What does this mean? A $1 trillion trade surplus with sealed exits has exactly one destination. The idea behind this is that surplus economies export savings. When the world saves more, it invests, and the money lands wherever assets are deep, safe, and open. The trade deficit follows capital, not the reverse. So basically, the idea here is because we have the most global, this can be a little hard for people to understand, but basically, what happens, and this happens all the time, like every single year, because the US has the most deep financial markets, people will say, oh, I just want to invest in US markets. When you invest in US markets, basically you go and buy dollars and invest in Apple stock, because you can't invest in Apple stock through a euro. Like, Apple stock is denominated in what? Dollars. So the only way to get it, and you're like, oh, well, I'm on my brokerage account. It's like, no, no, no. Like, that's something that the broker does on the back end to like hedge out currency risk or something like that. It's not actually how it works. If you want to buy US stocks, you have to convert your euros, your pound, your peso, your, whatever it might be, your won, $2, which is doing what? It's strengthening the dollar. And then you invest it in assets. When you have a stronger dollar, even if no one's trading with the United States, what does that begin to do? It begins to say, like, oh, well, I want to export more to the United States because it has a stronger dollar. So you can actually have capital inflows begin to create a imbalance in trade. So like, let's say there's no trade imbalance and the US imports as much as it exports every year. By just capital flowing in, it will cause the US to import more than it exports just because of how it changes the currency. If that sounds a little complicated, all you need to know is that capital flows in the world are a direct determinant of trade balances, and China understands that very well, which is why they've manipulated their currency. And it's very tough for the US to say, like, oh, we're going to stop being the reserve currency status of the world and close our capital accounts. Like, that's not going to happen in the United States. So the Chinese capital account, and again, you can go through all this yourself. You can feed this entire deck into Claude Code afterward. China's capital account is closed. Savers can't leave at scale. Foreigners can't buy at scale. Its currency is barely it into dollars and buy US assets. Like, they would do that immediately if they could, but they can't because capital can't leave China. And as a result, what takes place? All that capital has to be reinvested back into what? China. So that's how, well, one of the ways the Chinese government actually keeps capital there and keeps it investing. And so the idea is that you have this massive imbalance between the US and China, $1 trillion surplus sealed exits one destination. So the idea is that if we ever have a devaluation of or a revaluation of the yuan, or we have some type of devaluation of the dollar, and I'm not talking about like the Bitcoin dollar devaluation narrative that people kind of like throw out there, which is like kind of arbitrary in my mind, doesn't really work. Like currency in general, not just the dollar, currencies in general are meant to lose value over time. Like it's part of the system, it's part of like how a monetary system should work. People don't like to say that or like think about that because I mean, if you actually have everything pegged to the pegged to the gold, and you have something like pegged to that, and the currency never has inelasticity in it, you'll always have deflation and everyone will save their money instead of invest it. And you'll never have any investment in the economy and you'll never have any actual innovation or creative destruction take place. And then what happens is debt over time has more and more of a burden. And that becomes the hardest thing to pay. And you have delinquencies rise. And that's why we had the Great Depression. So again, people, should we have inflation at 10%? No. But don't think that like, oh, if we just fixed fiat, we would fix the world. Like that's like saying like, oh, if we just, like fixed water, we could sail on the ocean. You're like, what? Like, what does that mean? It's just it doesn't make any sense. So when we think about
Can I ask a question quickly
yeah,
before you move
yep.
on? Uh, with this like capital control situation in China and how they like try to retain within their ecosystem, what are their views on gold then? Do they see gold as part of their internal system, or do they not like are people allowed to invest in gold there as much as like their uh the CCP or whatever? Like how's that work? Do they have a positive outlook on it or a negative outlook on it?
So China definitely has a positive outlook on gold. Um, this is actually something I would say that most people did not understand during the gold rally that just took place. But this entire, well, let me actually see if I can pull this up. This entire rally in gold right here diverted from real interest rates. So China has always been a net um what is it called? Net buyer of gold. China always buys gold over time. Now, what happened during this period of time is in the beginning of 2025, uh, real rates and Fed liquidity and some liquidity in the system began to diverge from gold. Why is that? Because in March of 2025, it was one of the first times in history. It happened a couple times, like very marginal, never with this amount of strength. Gold rallied as the S&P sold off and the dollar sold off at the same time too. That that minor change is why gold rallied so much. And it's also why like I think it would be very very unlikely for us to move back down to this 3000 level in gold just because that was the level that all of these tariffs started to kick off. And tariffs are a direct pushback on this entire structural imbalance we have between the US and China. And the reason we had this rally in gold was primarily connected to this tariff risk. And not only China, but the rest of the world realized they need to have another neutral type of asset to be able to settle in or to hold against settlement. Because if tariffs go to 200%, like that totally changes the dollar's ability to like have reserve currency or to have the same uh, way that they take advantage of it, right? Like there's the dollar itself, foreigners take advantage of every single year. And again, don't get me wrong, if I was in another country, I'd be doing the same thing because that's the US is giving them the ability to do that, which is why we accept cheaper goods. It's why goods, when you import them, are cheaper than making them in the United States many times. And there's a lot of reasons for it. Nothing malicious is taking place. Everyone knows what's happening here. The malicious thing that's taking place is that, the U.S. can't just restructure their entire society and democracy and like close the capital account, reserve currency status. Whereas China and the CCP, because everything's top down, a lot of things that they are doing are directly malicious. But on the gold side, this entire rally that took place, people said like, "Oh, gold's rising, so it must be dollar devaluation." You're like, "No, that's not what's happening at all." Gold was rallying because the entire global trade system was put at risk in, March of 2025 when equity sold off, and what happened? Gold bid and the dollar sold off. That correlation tells you everything about kind of the global trade and monetary system. And it's basically like seeing long short positioning in hedge funds when there's like a vol shock, and you're like, oh wow, everyone doesn't have enough long exposure in gold on a like a country basis. And what happens is it bid it up. These types of bids in gold don't happen because you're like, oh, like people are finally buying ETFs. It's like that's nothing. The reason why it happens is because you have all these countries saying like, "Oh, I need to hedge my risk. Go buy, tons and tons of gold on the open market." So I think that's the main reason why. Um, and that's how I think that's one of the main reasons during this entire time right here, during this period, China also increased their trade balance really significantly. And I actually want to pull up this tweet by Brad.
As you're pulling it up, the reason I ask is from a trading perspective. Moving forward, I've had to rethink about a lot of my positions over these last couple of years about like, who am I fighting in my trades? You know what I
Yep,
mean? Like, who are my headwinds? Who are my teammates? And moving forward, I think I want to have positions on that have more teammates than enemies in a way. And
right,
like, are there positions that I can find moving forward that is less of a battleground, right? And maybe gold and then subsequently silver and copper or whatever is something that like isn't going against as many people and it benefits more people than it hurts or something like that, if that makes
totally.
sense.
Here's Brad is the foremost expert on Chinese data because one of the hardest things about Chinese data is that they lie about it. So, and they misstate it. So, like, the only way that you can actually create a decomposition of Chinese trade data is by getting every other data point in the world and, like, basically reverse engineering and back solving China data by literally basically breaking out every other variable in the system, figuring out what, and basically like the residual is Chinese data. It's kind of it's wild. It's like, okay, what's left over? That has to be China, which is very difficult to do, by the way. Um, this is you can see in 2025 right here. This black line right here, or blue line, black line right here, is the current account increasing, which means that they're exporting more than they're importing. So China's sending out more than they're importing. So at the same time that you have this shift in tariffs, China increases their entire exports, and that also overlaps with this entire rally in gold, which again people haven't really focused on as much. And now we're having a little bit of a pullback connected to some FX flows. But overall, if you think the US and China are going to figure out some amazing deal and we're going to go off into the sunset into prosperity forever, and Russia will come to the table, and Vlad and Xi and the Donnie are all going to kind of sit down and be like, oh yeah, you know what, guys, you all aren't too bad. Let's hang out and let's figure out something. If you think that's going to happen, you should definitely short gold here. If you think that everything's going to probably stay as it is, and you're going to still have turmoil, like you probably are like it's probably a safe bet to be long gold over the next couple of years because
We can't even solve the Middle East. How are we going to do that? We can't even do that.
we'll figure it out. We'll figure it out. I think that these. I mean, we'll go to this really fast. Actually, this will this will actually no. I'll save that for the paid subscriber section because that's really important. But going back to the interdependence, networks that connect the rivals or weapons. So global finance, data, and chips grew into very big networks. And the idea here is that everyone is depending on these new chips and data. The AI race runs through the same gate. Compute is the one input you can count, track, deny, and US private AI investment is running at 23 times China's, even as model benchmarks converge near parity. So there's a couple qualifications for that, but you can go through this standard thing, Stanford kind of a report on this. I think that's really good. Chips are the sharpest chokehold. One firm on earth builds and machines makes the cutting edge chips, and the US and allies control 90% of the equipment. The 2022 controls turned that into a basically the idea here is that the largest bottleneck on everything is one thing, and it's TSMC. The biggest limitation that China has right now is the chip side. So the reason why that matters is because if China decides to invade Taiwan and they decide to take over TSMC with kinetic military force, they will have accomplished two things. They will have solved their biggest problem in the AI arms race. I mean, think about it. China has built models that are like almost, they're not as good as Fable and the new intelligence models, but they're like basically like 6 to 12 months behind the US models. So they've been doing all that with like barely any chips compared to the United States. What do you think happens if they're like, all right, we're at a point, let's do X, Y, and Z? What do you think happens if they take over TSMC and Taiwan? I mean, listen, I know there's a lot of people that are going to be like, oh, no, it's not going to happen because the US and this and that, whatever. Just, I mean, it's a tail risk that you need to think about. That's all I'm saying. Okay. If if there is any news about like hitting capacity with like chips and China comes to a point where they're like, all right, well, are we going to try to win the AI arms race, or like, are we? Or if they get put against the wall, and they're like, oh, well, we need to figure this out, or else we're going to have issues in our economy, and they're like, oh, well, the last thing we can do is basically take over Taiwan to get more chips. If they're in that type of position, then like like what doesn't matter if you're like, oh, well, it's never happened in the past and it probably won't happen in the future. Like all the geopolitical experts are saying that it can never happen. And I'm sure there's reasons for that. But I'm just saying the moment I hear of anything where it's like, oh, TSMC is going to, or there's some invasion in Taiwan, or the Taiwanese currency is beginning to collapse, or because there's some news getting priced in or something like that, you basically just want to immediately short every single chip company in the world, get short ES, and just get max leverage short, which is why, actually, by the way, we'll go over this in a second. But where is this?
I have another question on this when you have a chance.
Yeah. This is why you want to have up right now all the single stock futures that are getting launched on the CME in the next couple of, I think it's on, you should sign up for this thing, but July 22nd, they have a industry breakdown, but July 27th, I believe it is, they're going to have the single stock futures launched. That will be very, very important because think about it. They'll have NVIDIA futures. They'll have AMD. They'll have all of these other futures of companies. And if that tail event takes place, you want to express that very explicitly in basically tech names. So those are things that you want to be just have up on your screen and be ready to pull the trigger on. And James, we've talked about this, but it's like having your capital in a place where like you're always ready and you have all your instruments in front of you and you're always ready is like so key. And it's still something I think that is not appreciated enough because I think a lot of people have their capital all over the place, like some in this account, some in that account, some with this investment advisor, some at this VC firm, some at this private equity firm. It's like all over the place. And like, listen, I'm not like, there's reasons for that sometimes, right? But I'm just saying that like sometimes you have to take really big, aggressive, fast bets, and having it all in one place or having it aggregated or having a pool capital somewhere is very important. So that's all.
Yeah, I mean, I think we both think the I've seen different futures launch in my day and they've been unsuccessful, but I do think this is gonna be a big deal, and getting set up with a CME account or however this is gonna work for individual traders and figuring out how to best view those products, um, is gonna be vital because I'm telling you, if you can have the capital ready, have your seat there, and have the ability to pull up a stock and have some plans. If this comes out of the the biggest market moves come from non-priced, like more catalyst driven, right? Like shocks. And if you have the ability to be there before, you know, 99 out or 98 out of 100 people, you can make a trade that makes 10 years worth of money.
Right.
Um, and if you don't have that set up, that's just your fault. So,
Yeah, I totally agree. I think I mean, this entire run in semis, actually part of it overlapped with gold, sorry, during this period of time of semis. And I think that the $1 trillion changing of hands, and this is what we're going to really go to on Wednesday with the kind of special guests that we'll have, is that the defense spending in the United States right now, there's a lot of spending in um, in AI right now, but the defense side is just starting to begin to kick off. And we've been myself and James have been involved in a couple of really interesting deals that we can't talk about publicly here or anything like that yet, but really interesting deals that are directly connected to the U.S. defense space. And you look at what's taking place, the upside that occurs, and how people like Alex Karp are changing the entire mindset for everyone, so that everyone, true patriots and people who believe in the United States as a whole, are actually saying like, oh, you know what? Like, I want to take all the technological abilities I have and help increase US dominance instead of making another Uber Eats app or make it another thing that you're like, oh, well, this
right.
new thing helps you meditate for 40 minutes instead of 30 minutes because the timer, it's revolutionary. We're gonna disrupt. It's like Russ Hanneman in that show where he like has a AI talk to his kids and tell his kid all the things that he doesn't want to tell him. He's like, I'm disrupting fatherhood, so I don't have to ever tell my kid anything he doesn't want to hear. So it's like everyone's creating with all these apps that you're just like, dude, these are so dumb. And then you have like guys that are in the defense space or the reindustrialization of America space, and they're just cleaning up because they're so good.
I mean, that's a great way of saying a lot of us have lost the plot. But hey, I actually am shocked that people are still making apps out there. You know, the meditation app was one of the best examples you could have brought up. That goes to show you how far off the beaten path sometimes we've come, and hearing about a subterranean missile company or whatever was just what I needed to kind of bring me back, you know? Bring me
Totally,
back, baby.
totally, totally. Um, here's just a great chart. Everyone knows this, but Palantir. There's a reason why Palantir has outperformed all of the peers, all of them. Like this is just such a great example of Alex Karp's technological republic and everything that he's created. It's just so good, and there's an entire new establishment forming. And you can like him or hate him. It doesn't matter. Whatever. I'm just saying that something's forming where you have all these guys beginning to take a more dominant stance in the industry between VC. I mean, what is it? Kevin Warsh just had Mark Andreessen appointed to one of the boards, or not boards. What is it? Um, oh my gosh, guys, what is it? The new meetings, new initiative. What are they saying, James? Like, Um,
You mean like, task
yeah,
forces?
task force, task force. Mark
Yeah.
Andreessen, who runs, I believe, the largest VC firm in the world, who is very clearly or self-proclaimed um, autistic or what do you want to say, retard Maxine? Like he's very clearly pushing the entire establishment and VC space, capital, and everything toward U.S. reindustrialization, U.S. exceptionalism, and capital into the United States, and betting on these people. And now Kevin Warsh recognizes that and is pulling him in. Which again, was Powell doing that? No. Powell's like, oh, well, we always talk to business leaders all over the place. I just talked to some guy who runs a brick and mortar store selling canned goods. I'm just like, what?
Yeah, yeah.
Like, what are you
Let me show
talking
you
about?
how relatable I am. Yeah, I was over in Pennsylvania getting paid 100K for a half an hour talk, and I talked to this guy who runs a small what do you call it, car wash down the street, and it's rough out there for Main Street, so we're doing our best.
And it's
That's
just
good.
like, oh my god, what's going on? So the the idea here is that when you come and start pulling these pieces together, when you see these changes in FX, when you see these changes in gold and silver, and again, things like this, especially where you have changes in sector flows over the next 5 years, 10 years, especially 3 years, you are going to see so many more U.S. defense companies go IPO. It's going to happen, and they're going to, we're going to have a kickoff of a lot more capital rolling into that space. And here was a tweet just the other day I was pulling up by one of our friends, John Lott, and it's just such an example, right, about this video that was released that shows a one-way attack surface drone employed during a strike submarine maintenance facility in Iran. And it's just, the offensive capabilities of the US are evolving so fast. And you guys should definitely follow John and all of the stuff that he's doing at New Vista, um, because all the defense side of things is just going to pop off a lot more in the VC space. And New Vista and John and things like that are one of the firms that's on the cutting edge of it. And again, it's not cool right now, or I think it is cool right now, but like it's less talked about right now. Why? Because like there's no IPO companies yet. It's just Palantir. So I think that when you think about the next stage of everything, if you can be early stage, if you can bet on defense, if you can bet on the US exceptionalism rising, if you can bet on tech and AI, and you can bet on the convergence of all of those, that's where you can begin to get some real outsized returns. So when
By the way, how much they've been mentioning how much spending is going into defense, and it's like a staggering amount. I think
oh
it
yeah,
was either John or maybe Brando or somebody like they were saying it's like a couple trillion dollars and like recently. It's just like a staggering amount, and a lot of it's probably, I would assume, bipartisan, even though it's not like outwardly said so.
totally. Yeah, totally. I think that there's yeah, like the amount, I think it's because it's happening so fast. And I think the deregulation that's happening via the Trump administration, um, which is like so explicitly clear that people, because it's like a little bit more intangible. But like Ken Griffin came out, and we talked about this. He came out and he was like, "Oh yeah, myself and no one else, no other CEO would invest any money in the United States, and we were just waiting because during the Biden administration, all of us were penalized for investing in AI or investing in these things." It's like, what? Wait, like, why didn't anyone talk about that? It's like, well, if you talk about it, it's all like backdoor conversations where it's like, oh, well, you're not getting introduced to this person, to this person, to this person, right? And, like there's a lot of like subtle things happening under the surface, which is why everything felt like it was stagnating and there was no like real push in the US economy where CEOs are like, we're investing a lot of money right now. And then what have you seen ever since the Trump administration came in? They're investing a ton of money, not only the government side, but also just the business side. Don't even worry about the government side, right? And again, it doesn't even matter. I mean, I'm just talking about what's taking place in investment data. That's all, you know? So I think all of these things are showing the larger context that is occurring. And when you pull these pieces together, what you can understand is that the US China relationship is at a significant imbalance right now. All of the spending that takes place in defense or all of the geopolitical moves that are taking place, which on the day today we have crude rallying, we have some other things that we're going to cover in the paid subscriber section. All of these things fit into the larger context. And when you begin to recognize that this asymmetrical linchpin of the AI arms race and the space race are just massive, massive elements that most people don't even know about because they're just things that people overlook or don't want to really like push into a lot because they're they're so politically charged for a lot of people for some reason. And a lot of the people that don't want to talk about them, they're not publicly trading in markets. So when you walk away now, and again, this entire slide deck will be available to you afterward at Capital Flows Research. Every single thing that we do will be sent out there. You can always get all the research that we're doing at Capital Flows and every single breakdown, everything else. The takeaway here is that understanding this larger context will frame every piece of price action. It's the structural reality that we all are operating in. And so um, with that kind of being the main section that I want to cover in the live stream today, we're going to transition into the paid member section. If you want to go over and say, okay, all right, how do some of these things connect to the current trades that we're thinking about, current trades that we're in, and how it connects to the larger system overall, and then also go through the live Q&A and the proprietary report that comes after that. We'll be going over that, and it'll be streaming just on Substack, and we're going to go deeper into that right now. So if you want to join, you can go and click the link below or above in the Twitter profile, and then you can always go and rewind and watch the recording of this video if you just join to begin to get an idea of, okay, here's how the moving parts work for the US side of things. Why do stocks go up over time? Why should I be thinking about these larger realities that are occurring, and how should I begin to position for those? So we're going to transition to the private member section right now. We'll take a quick break to allow everyone to go over and transition to the stream on the Substack and become a subscriber if they want to. And with that, we will catch you guys on the other side in just a moment.